This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
Yeah, I was talking to one of our clients they said they have 30 deals they've built in the last couple of years that they haven't been able to sell. And they're just the most they've ever had, they're sitting on. And they're like, until we sell a lot of those deals, we just have to be very careful what we do, how many more deals we take on. And so I think you're right, Tom. I do think it's interesting. Kevin Warsh, as we're recording right now, has just been appointed the new Fed chair. And there's a lot of speculation that maybe not immediately, but maybe, later this year and next year, he might start to lower rates. And so I do think that could help a lot just to increase the liquidity in the market. If a lot of these deals sell, the capital gets recycled. But there's a lot of other challenges besides just that. So I don't know if that's going to be enough.
Yeah, I think we're going to need something like that to happen. I feel like the last 2 or 3 years, we keep reading and hearing about, there's going to be a wave of foreclosures, but we haven't seen it yet. And I think the lenders, the banks are working with these developers because at the end of the day, they don't want to take back the real estate. So, but continue to hear about these issues and problems that people are having, and you keep waiting for these wave of foreclosures, but they still haven't happened. But like I mentioned, I think it's because, the banks are willing to work with their clients a little bit more on those.
Yeah, my concern is you might see your rates come down because unemployment's going up. And I think we're already seeing unemployment go up a little bit. And so if that continues through the end of the year and then you get lower rates, that's not necessarily a bullish situation, especially for rents and occupancy and all that.
Yeah, that's a good point, Tim. Everything is so intertwined because if rates do come down and then you start having liquidity in the market and then some of these projects, start kicking off and getting capitalized, we'll start to see construction pricing come back up, which you always say like construction pricing just doesn't come down because it doesn't over time. If you looked at a graph over time, it's only going up. We were talking to a developer yesterday that said, we were actually talking about a couple of deals in Houston. The deal that Rick Craig built back in probably around 2000 off Allen Parkway, the high rise, and his cost basis was like $100,000 a unit for a high rise.
Gosh,
and that's only 25 years ago. And then we were talking about the deal you guys did out in Katy, kind of coming out of the Great Recession, and the cost basis was about $90,000 a unit. So that's less than 20 years
Martin
ago.
Fine. Yeah,
yeah. So and he was saying they sold that deal for $135,000 a unit, and it was just like a record. It was like, we may never see a 3-story garden deal sell for $135,000 a unit again. And that's, that deal probably sold in like 2013 or something. Because it probably, so it's like, we're talking now like less than 15 years ago.
Wow. Now, and that was an A+ deal. It wasn't an affordable workhouse.
Now you would dream to sell a deal, to build a deal at that cost basis. So over time, construction pricing is only going up, but there is a window right now. And those are the developers we're working with. I think they're more private that are saying like, we have to figure it out. We have to go, because I even had a developer tell me like he thinks he may be late right now. Cause he's like, I think we're going to be in a completely different world in 3 years. Like he's thinking that because it's been so shut off and so hard to get projects done, that you're going to have a much more optimistic, but a positive market environment in a couple of years from now. Mm-hmm. Because if costs go back up 10 to 15%, that's so significant to these deals.
And a lot of the reduction that we've seen in construction pricing over the last 6 months has been, at least here in Dallas, it's been margin from the subs. Yeah. It's been, hey, we don't have another project to work on, so we've got to reduce the rates.
What are you guys seeing construction pricing in Houston? We hear that it's lower, than in Dallas, but like, do you have any idea like what builder or what developers are able to build to on some of these deals? Like it's kind of become now where you can deliver these suburban surface park deals in Dallas, like at or around 200 a unit. Groups are getting below that now, all in. And so we're hearing that Houston's even less.
I don't have any specific numbers, David. I would assume that some of our numbers are kind of high just because of the type of deals we're seeing, like, Clear Lake or Northwest Houston, where you're paying $3 foot for the dirt and doing a 4-story product. We're not seeing a lot of the kind of 3-story product getting done. Do you know, David, if there are any of those?
You're talking about the all-in cost, to build.
Yeah, just all-in cost, like per unit.
Yeah, I think it depends whether it's affordable or it's more of a affordable, more of a workforce or more of an A+ product. But, I think it's kind of in the 170 to 190 range probably for 3-story garden style.
Mm-hmm.
Maybe slightly less than 170.
Yeah, that sounds kind of what we've heard, because we're just talking to big equity groups that look at deals across our markets. We've been hearing that you guys are normally 10 to 15% less, which is pretty incredible. But I think a lot of it's just less activity. I think the labor base is supposedly, you can buy down a little bit more aggressively, but that's pretty strong, because that means, if a deal's 200 here, it's like 180 there, or like you said, maybe even a little bit less. So what are you guys seeing on the industrial side as far as capitalizing deals in Houston? It seems like that's a use. The story is a little bit more clear. If you can find a well-located tract that underwrites, there seems to be a lot of capital. Is that still the case, even though there's been a lot of development in Houston?
Yeah, the industrial is from an equity standpoint, the equity is, attracted to industrial development right now. It seems to be the use type, retail also, but industrial seems to be the use type that's, not to say that it's easy, but easier to capitalize than other product types out there. And to your point, you have a site that's got good access, no major drainage issues, access to utilities, it's going to be, you should be able to get that capitalized. And I think, right now what we're hearing is a lot of times bigger the better. You've got these developers who are back to wanting to build the big bomber type development. So we're seeing a lot of activity, up around the Grand Parkway from basically I-10 all the way up to 249 area. So you're seeing a lot of activity there. Down in the southeast, still seeing a ton of activity there, but it's definitely the product type that equity is being drawn to right now.
Yeah, I would say that equity is getting a lot more aggressive to go out to these further out kind of fringier areas that where in the past it needed to be, Beltway or, 290, closer in. Now we're seeing it, go way out past the Grand Parkway or just fill in along the Grand Parkway and still paying these, pretty high numbers in the $8 to $12 foot range.
Is the northwest part of town or the west part of town, would that be the most active industrial area, or is the port still? I know the port's pretty hard to find sites in and around anymore.
Yeah, I think the port, it's more of it's hard to find a site. But then you look at kind of that pie shaped from I-10 west past the Grand Parkway and up to 290 west, all the way up to Waller. That pie shaped area. There's still a lot of land now, but that seems to be where you're seeing a lot of people looking around, trying to find sites with freeway access or right off the freeway or very close proximity. I'd say that's probably where we're seeing the most activity.
Yeah, maybe even take it to 249, like you were saying. Yeah. I think probably I-10 to 249. So it's pretty much northwest Houston, like it's always been.
I mean, if you can find something along the Beltway, which on the west side of town is going to be very, very difficult. So. But if you can find something along the Beltway like South Belt or East Belt, they're seeing a lot of activity as well, just because you're one ring closer in to the city.
Are you seeing data center activity or just even leasing related to data centers in Houston, or not as much, just because of the proximity to the coast and some of the liability and risk associated with that?
Yeah, so we were seeing the issue was with Houston several years ago was obviously we're close to the coast. We see a lot of hurricanes come through here, the weather. So it was for a while, I believe Houston just had a big red X on it for data center development. And if somebody was going to do it, it was far northwest, far west, far north, away from the coast. That shifted a little now where I haven't heard of anything on the southeast side of town, closer to the coast, but you're starting to hear and see more rumblings of stuff on the west side and northwest, and not far northwest or far west, kind of Grand Parkway area. So we are seeing, some of those pop up, which is a big change versus what we were hearing 2 or 3 years ago.
What's hard on the data center side is how many of these deals are real deals. I mean, wouldn't you say, David, Houston, we're seeing sites get put under contract for data centers. We're seeing groups make offers and, actively looking for these sites. But I don't know that we've really seen a lot of big data centers close that are actually real deals will be built. Yeah, from what I've seen.
Yeah, that's right. I think, my experience is they're getting in there, they're getting sites under contract or trying to get sites under contract. And then ultimately, a lot of times what comes out of it is they find out, yeah, we can deliver power to you, but it's going to be 3 years out. And, most of the times they can't wait that long. So that's the issue we're seeing is how number one, how much power can they get, but then how quickly can that power be delivered? And it's usually not very quick. So that ultimately ends up, a lot of times killing the deal.
Yeah, the sentiment against data centers is becoming a big storyline because I know Gallup just did a poll and found that 70% of Americans are against data center development, a higher percentage than Americans that are against nuclear plant development. So it's all over the news. And I think there's a lot of misinformation around it because it's like over 60% of those against it are against it because of the impact on the environment. But they said that a data center actually has less impact than an industrial development. So if you're against data centers, you're basically against the industrial revolution. But I think that's you're seeing Texas had their first, I think it was county, try to put a data center moratorium in place now. And so you've already seen that in other states, but that'll be really interesting too, because we've seen something similar up here. There was a huge wave of successful data center development. And then the last 2 years or so, there's just been a lot of noise around different sites going under contract and getting in the queue. And they've made it so expensive to get in the queue and try to do a load study and figure out if there is power. And we've seen a lot of sites fall out of contract. And then you also have this regulation potentially coming at the same time. But the leasing activity in DFW, it's really driven by a lot of the AI and the data center activity that we've already had. And so we're definitely seeing that. And that's really helped our local economy from an industrial standpoint. Trey, do you want to speak to what we're seeing industrial here from quality of sites, where they're interested in equity?
Yeah, for sure. I mean, the really interesting thing, we spent a lot of time talking about multifamily equity. On the industrial equity side, it seems right now, I'm sure there's projects exist that for whatever reason aren't getting term sheets, but the majority of deals that we're seeing across the market for industrial, it's not a question of getting equity. It's a question of, can you get industrial development on this site? And even across the spring here in 2026, we've really gotten to the point where guys are starting to look farther out again, which is really, it's encouraging. It's a little bit of a surprise thinking, people are still going to stay disciplined to the more interior areas. But as we've talked about before, we're running out of supply for the 500,000 to 1 million square foot type buildings. And so it's just driving guys to start looking out further again. And so I think from an equity standpoint, there's pretty well equity available for industrial deals. It's just a matter of finding a site that's entitled, that checks the boxes, and you can make it work from an underwriting perspective, so right now, I think industrial continues to carry the day in DFW. It sounds like for the majority of Texas, to be candid, it's the strongest product type and has the most captive equity right now. And to your point, a lot of that ties back into being in a great market, being in a business-friendly state. The occupancies are really solid on industrial deals, and the leasing's really strong. And we're continued to be so blessed because in Dallas, it's like, I don't know, at least once a week or a couple times a month, we're seeing another article of so-and-so just relocated their corporate headquarters to Dallas. And so that continues to be encouraging.
Yeah. I think the industrial activity, we made the prediction when we were doing our predictions, to start the year on the podcast, that there was going to be a lot more large industrial development, like larger projects, bigger bombers, like you said, David, in Houston, because we felt like it was getting not oversupplied, but potentially oversupplied in some of these core areas because there was so much focus. Equity on the industrial side was tighter the last couple of years. It really wanted to be around the airport, closer in. And so you had a lot of bigger developers doing these like really small developments, buying 10 sites just to get a project going. And there were quite a few million square footers in the market, but now they've pretty much all leased up, like Trey said. And so markets like South Dallas that 12 months ago, no chance you would have gone down to South Dallas. People were still just, every meeting was, well, we'll look most anywhere, but not South Dallas. Now South Dallas is being brought up in a lot of meetings as like where people want to look because all of that product got leased up. And so you have South Dallas, you have the Alliance Airport area up in North Fort Worth that's really active, really hot, very tight, really hard to find really anything up there on the land side. So the sites that were available that were really expensive, had all kinds of site issues and floodplain. They're like all under contract or sold now, just because it's such a tight market up there. And then the McKinney market has really benefited from the announcement of the new airport, all of the northward expansion of the suburbs and rooftops, and 75 and just the corridor that is. And so we've seen McKinney just explode with industrial activity and growth. And we've been able to be a part of doing several deals up there the last 12 months. And I think McKinney is just really benefiting from the fact that most of DFW's moved north, and there's not a lot of development on the tollway corridor for industrial. Most of it's gone to McKinney. And so McKinney had been smaller product, and now we're starting to hear about, pursuits of a lot bigger sites. Like Crow Holdings has a project that they just started on up there. It's a huge project near the airport. There's another large tract the developers got next to the airport that'll be several million square feet when it gets developed. So anyways, that's exciting to see, the type of industry that's going to be coming in, because that's a lot of jobs. I was talking to someone that said that within a couple miles of their site, which was in McKinney, kind of at the intersection of McKinney, Plano, and Allen, there's like 5,000 jobs coming in the next 2 years, just in that 1 to 2 mile radius, which is incredible.
Where are you guys on the single family side in Dallas? Is it pretty slow up there still?
Yeah, it's really challenging. Single family obviously was the hottest product type in 23 and 24. A lot of builders were out being aggressive, continuing to sell homes. And we've just gotten to the point where there's an oversupply of product. There's an oversupply of lots. Groups have too much land on their balance sheet. They're trying to work through all of that, and home sales are slower. And so there's just a continued sentiment that I think it's gonna be another probably 12, 18 months for things to really cycle through on the single family side. But I would caveat that with smaller developments in better locations. Sort of what we were talking about on the industrial side a year to 2 years ago, where it was being picky, being in really good locations. We're working on a lot more sites right now for single family that are, kind of in that sub 50 acres, even like 15 to 30 acre type sites in good locations that have maybe been picked over. I think those are the projects that you can still get bullish on, because, the time horizon of cycling through your lots and just the overall check size, et cetera, is a lot more palatable. So I think that there's still opportunity and there's still groups out willing to do deals, obviously, but it's challenging. There's no doubt about it.
Yeah, a lot of the activity would be like lot swapping between builders, and to Trey's point, coming back in and rezoning sites. It's interesting because now in some of the areas that would have been hard for single family to play in, now those areas, if you were competing on like a multi-site, they're overbuilt for multi, or BTR is almost non-existent. So in some cases, single family can come back in and play on like a multifamily site or a BTR site, just because in those markets, there's not really demand. I think certain single family lot sizes or just building types just don't make a lot of sense. So like townhomes in the suburbs, it's interesting because a lot of these builders were going and building townhomes like way out in the suburbs. And it's a little bit of a head scratcher, because it's like you understand building, an apartment out in these locations, but building a townhome that someone's going to buy, but then they're still going to live way out, but not have, like an actual house or a yard. I think that's caught up to a lot of these builders. And so we had a client that they had a site that they got a really good basis on in a really good location in Melissa, and they tried to zone it for multi and they got shot down, and city wanted retail. And anyways, they went through and they ultimately had to go in. I think they rezoned the site 3 times at the end of the day. But the last time they zoned it, they took the townhomes out, because ultimately it went from being a multi-site to being all single family. But they had an iteration of it that had a lot of townhomes. And he said they couldn't get any activity from builders on the townhomes. So they scraped all the townhomes and then turned it into 30-foot lots. And they actually were able to get, builders interested. Because again, it's a good location, but there's just no townhome interest unless you're like really close in. So, if you want to do townhomes right now, attached is really difficult. And then it needs to be detached, and then they would need to be a lot closer into the city. And then single family, again, like Trey said, we're even doing some deals that are 3 acres, 4 acres, and they're not townhomes. They're closer in markets like Richardson, but they're just 0 lot line homes, you know, in these higher end areas where you're going to be able to sell the homes for like $1 million or plus potentially. And that's making sense to builders versus, you know, going out to the suburbs, which was when everything was trading in all these different markets. Kaufman County has a lot of supply, you know, so there's certain areas that are more overbuilt than others. Generally, like Trey said, it's a pretty bleak picture, but we're still closing single family deals. It's just going and really finding the right deals. We're seeing a lot of deals on the Ascent side. So we have a lot of single family land developers and builders bringing us deals to invest in, to help take the land down, to potentially lot bank. There's a huge need from a capital standpoint for these builders to get some help. Builders don't want to take raw land. They don't want anything on their balance sheet. And so there's a lot of land banking, lot banking going on, and just looking for ways to continue to be active because, you know, a lot of these are public companies. So they still have to show growth. They can't just show no growth or negative growth year over year.
Yeah, I'd say in Houston, we're seeing something, I'd say somewhat similar, but maybe a little bit more aggressive. Still seeing some builders pick up sites. I think like you're saying though, Trey, smaller sites, you know, that are more infill, suburban, you know, kind of locations that are better locations. Even some kind of urban sites, not true urban like inside the loop, but Spring Branch area, Energy Corridor area, you know, seeing groups pay as high as, you know, $20 a foot for a 20 to 30 acre site. You know, so still some pretty significant deals. A lot of these builders are saying that Houston is their number 1 market in the country for home sales.
Wow.
May not be as good as they used to be, but they're better than other markets they're seeing. And we still tend to have a little bit better lot supply, you know, versus some other markets. I would say on the developer side, the lot developer side, we're still seeing, you know, pretty good activity.
Yeah, the activity is good. You know, they're still looking at larger tracts, you know, couple 100, 300 acres. You know, but Tim's right. And to your point, Trey, to, you know, those smaller sites, you know, we're really seeing them, you know, those are deals they can get in and out of pretty quickly. And it's not a heavy drag, you know, being on their balance sheet. But yeah, when you start seeing townhome development out in the suburbs, that's kind of a sign that the market's getting super frothy. And when you see that, you feel like, all right, we're right there at the peak and maybe we're about to hit a downturn. We're not seeing really any townhome development or even people proposing townhome type development out in the suburbs.
Yeah, that's right.
That'll be a good reminder for the next cycle when we start seeing townhome development in the suburbs again.
Well,
get ready.
And it's hard because, again, it goes back to there is zoning in some of the Houston suburbs, but a lot of this you kind of got to put on the cities. The cities are forcing this zoning. There's some of the zoning that Trey and I run into, it's just crazy. I mean, it's ground floor retail across the entire multifamily project. And I know you guys see this too, like in the few cities that have zoning in Houston, they only are like crazy with the type of stuff that they want to see, you know? And so it's always ground floor retail on all the multi. It's like that doesn't even work on the best sites in the urban markets.
Right.
Yep. And then it's like townhomes. You know, it's like if you look at every land plan, in the way that a city will zone it is they have to see the really dense multifamily with the townhomes, with the, you know, retail. And so they put all that together. And so there is a part of that where, like you're saying, David, when the market's hot, some guys go do well on those townhome deals. Very few of them do, right? And then it's like when the market cools off, a lot of people get stuck. I mean, we were talking to a client of ours that said there's a townhome builder that's built a bunch out in Mesquite. And it's like all these finished townhomes that they can't sell. It's like, what do you do?
Gosh.
It's like, what do you do? Yeah. I mean, I guess, you know, you may have to
start renting them out.
Yeah, that's right.
That's true.
BTR deal.
That's right. Yeah. Becomes a BTR deal.
Which that's not a market you want to go rent out townhomes in.
Yeah. Well, it's not a market you ever should have probably built townhomes in either. But it's, you know, it's hard. I think it's right. We were talking to a developer out of Arizona that was saying, you know, it was so hot in Arizona that in Scottsdale, and it's funny because I remember looking at some stuff in Scottsdale 10 years ago and, you know, this is the last zone site in Scottsdale. It sounds like Scottsdale's got like 3,000 units under construction right now. And he was saying that there was a couple deals getting $4 rents. And so every deal was closed and built assuming $4 rents. And I was like, well, how are those deals doing now? And he's like, I mean, there's like one of them that's really unique that's kind of held up. but like pretty much all the new stuff's like $3 rents. So it's like, it didn't make any sense. But you're right, you get to the top of the market. And I think, Tim, it speaks to what you're saying about maybe bumping along the bottom. When you're at the top or you're at the bottom, you feel like you're stuck and it's just not going to get better, and that we're kind of in it for the long haul. And the main thing to know about real estate is it's always going to turn. Mm-hmm. It's either going to get better,
that's true.
It's going to get worse, but it's always turning, and changing.
What about build to rent? Are you guys seeing build to rent, or is that pretty dead right now?
Very little. Closed one in November. We've got one that hopefully will close this summer.
The Senate bill didn't help.
Yeah.
I mean, now that that's resolved, that's great, but that didn't help. It was already hard, and now I think just has people more nervous about the future, and it's delayed some of the stuff. It basically meant like we didn't really do anything the couple months that was impacting things.
It's just challenging. The deals up here just haven't performed as well as everyone had hoped. The sales haven't really been there. And those guys, primarily, they're really trying to get a very low basis on their deals. And so it's just kind of I don't want to say a unicorn, but it's very challenging to get a BTR site right now that checks the boxes. One of the top BTR developers in Dallas over the last 5 years, they didn't even close on a land site last year.
Wow.
So it's challenging.
Yeah, but it's
Are the cities still pushing?
Tim, to put it in perspective, I was going to say, Trey and I have probably worked on more BTR sites that are busted that we've sold for single family for sale or rezoned to something else recently than we've actually worked on a BTR site.
Yeah.
Just because that's how...
Are the cities still pushing for build to rent, or are they not really pushing for it?
The cities have never really liked it.
Yeah. So Houston, we haven't really seen, I don't know if we ever really saw a very strong build to rent. I think we've maybe closed 4 or 5 build to rent deals in the last couple of years. And really no one's been looking since, what do you think, David, like the last 2 years or so? I mean, we've had very few groups even really looking for build to rent. So.
Yeah, it's the groups who are still looking, and like Tim said, they're few and far between. I mean, probably count them on, a couple fingers, definitely on one hand. They're the groups who are looking for larger sites, typically looking to build bigger developments, 200 plus units, probably looking to pay mid single digit for the dirt, maybe even lower. So the high density BTR deals, we're not seeing those type of BTR developers very active or active at all in the market right now.
Yeah, that's interesting. I remember a guy that used to work at Next Metro that was a part of a lot of their like initial wave of development was telling me just how expensive it is to build the cottage product and just all that goes into that. And it was back when all the multifamily developers were looking to get into that space. And from what Trey and I have seen, most of those multi guys decided to stop building it. Yeah. I think part of it is because like you can still build apartments. So why go build like a completely different product type that's more expensive, that maybe you don't understand quite as well, that like Trey said, you don't have the history of the exits. We were talking to a developer that is out in the Phoenix area, and that's where a lot of this started. Yeah. And he was like, there's certain areas in the Phoenix market that got so overbuilt with BTR. He's like, I don't know if they're ever going to like come back because there's just like so many BTR sites. So I think that like initially when it was new and a new product type, people were really excited about it. And maybe there were some good stories related to it. Like you're going to get higher rents. The renters are stickier. You're going to sign longer leases. They're not going to leave. It really like speaks to the person that wants a dog and wants a yard and all that. But it just hasn't really panned out as like across the market at the scale that people tried to go build it.
I also look at, you look at the average home price here in Houston and Dallas and versus Phoenix, there's not a wide enough gap. Or I think they're realizing there's not a wide enough gap between what it costs to build a BTR deal versus what it costs to.
Across the country, they built a BTR deal that we sold them back in 2021, and they pretty much built that one deal and said they're never going to build the product again.
Yeah. Well, guys, what summer plans you guys have going on with your families and things? Ending this second part episode on a little bit lighter note. It's important to get away in the midst of the stress of some of the deals we work on and get to spend time with our families during the summer. I know that's important to all of us.
Yeah, you want to start, Tim?
Yeah, we're going to Kauai here for about 10 days. Nice. And then my son Luke's 15, he'll be a freshman in high school next year, and he's on the football team. So we got a pretty full summer of football, just getting ready. They do like a 7-on-7 at his school in June. He's a quarterback, so he has to be available for that and for workouts every day, doing a lot of weightlifting and stuff. And then he'll have a little bit of a break in July, and then getting back at it again to get ready for football before school starts. So we have less of a flexible summer than we've had in the past, but we're going to Hawaii, and then we're going to go to Telluride for about a week. So that'll be fun.
Yeah, that sounds fun. Playing football is so much fun, but I don't really miss what you just described. Think about how hot it is in Houston and going in and lifting every day and working out 2 days and being out in the heat like that. I don't miss that, but I do miss getting to play.
Yeah. No, that's right. It's definitely rough. It'll be fun. I love the summertime. I love getting time with the family and just a little different schedule and getting more time with the kids. There's not like the homework every night and just all the activities that we're doing during the wintertime. So it'll be fun.
Yeah, I'm looking forward to summer too. To Tim's point, it just feels like with, kids not having to get up, get ready for school, eat breakfast, homework, all that, it just slows down a little. And that's nice. Our big trip this summer is we're going to Italy. So we'll be gone for 10 or 11 days, going to Rome, Florence, Tuscany, and then on the way home, we're going to stop in London for a couple days. So going to do that. So excited about that. And then we're going to get away in late June, head out to Carmel, my wife and I, Donna, and another couple. So that'll be fun. Play a little golf out there and just hang out. And I've never been, but I've heard great things about it.
Pebble Beach or just somewhere in Carmel?
Yeah, we're not playing or staying at Pebble. We're actually playing the par 3 at Pebble, the Hay, but we're not playing the course there.
Yeah.
Playing another course there called Poppy Hill, a little bit easier to get on, but so we'll do a round there and then play the par 3.
Nice.
So yeah.
That'll be fun. It's crazy, David. I was thinking your girls are getting older. So you have 2 in high school now, right?
I have 2 in high school. Next year I'll have 3 in high school.
Gosh, that's
so
amazing.
I'll have a 9th grader, a 10th grader, and a 12th grader. So Lila, will be on her last year.
Yeah.
Wow.
So this will be our last year with her living at home, which is crazy to say.
Wow.
Hard to believe.
Gosh.
Well, that trip you're going to take will be pretty special. Just at the age that they're at. That's a very memorable trip and time to get to go to a place like Italy. I mean, Italy is one of those places that I can't wait to go back to someday. I haven't been for a long time, but it's just a really special place.
Yeah, I agree. And I think, they're at an age where I think they can appreciate it.
Yeah.
We didn't want to go when they were too young, dragging them around on tour after tour, seeing,
museums
Coliseum,
and stuff. Yeah.
Sistine Chapel, elementary, middle school kids probably wouldn't appreciate that nearly as much as now that they're all in high school.
Yeah. That'll be a little bit more expensive trip nowadays.
Yeah. Luckily, we booked our plane tickets before, all the fuel surge.
Nice. That's good. And you didn't book Spirit Airlines. So that's good.
Yeah, that's right.
That's right.
Yeah, I don't.
What about you guys?
I don't know if either of us has anything quite as exciting as you guys. We're in a little bit different spot with our kids being a little bit younger.
Yeah.
So we'll still do things with our families over the summer. But Trey, do you have anything big planned this summer?
Nothing big. My daughter's 3.5 and my son's 1.5. So we're kind of at the age where right now I just try to avoid the normal summer vacation time frame. So we're going to wait and go somewhere kind of early to mid-August once everybody's back to school, kind of take advantage of that. But no big plans, but same. I just, take the time to appreciate that our business slows down a little bit and really try to just enjoy the time with the family and not be so ingrained to our business every day. I think just enjoying this time while our kids are so young is just the most important thing and so much fun. So I don't know if we'll either probably go to Florida or Colorado, but either way, it'll just be a good time.
Yeah, there's so many times it's hard in our business to truly be off, and when you run a company too, you can't necessarily just be unreachable. But at least in the summer and then over the holidays, those are the times when more people are out. And so it's a little bit easier to be more disconnected. But also so many of the projects we work on, back to talking about equity and how hard it is, so many of these deals are outside our control, whether or not they're actually going to happen or close. And so there's been plenty of times where you're getting pulled and you're stressed out about different deals and what's going to happen and what's going on. And at the end of the day, I always have realized or like to say that it seems like this stuff I've worked on when I was on vacation, like never ends up panning out for some reason. It's like, those are the ones. Yeah. It's so important just to try to separate as much as you can from that and get to spend time with the family. And that's where it's great to have a team and work together and try to support each other when we're out, so that, as much as possible, somebody else can be helping or steer your deals or take calls or hop on stuff while you're out, which is good.
Well, and just an encouragement for you guys, because I know, Dave and I probably feel like, it was like yesterday that our kids are that age. I mean, it's crazy how they're, 1 year old or 2 or 3 years old or 5 or 7 or whatever. And then next thing you know, they're going to high school or they're whatever, activities they're doing, driving a car, and you're like, man, what happened? Like, this kid was a little kid, not long ago, and now they're driving a car, so I think you're right. I mean, these deals, like, I've forgotten about half our deals. I mean, there's deals now we see, and it's like, did we do that deal? I can't remember if we did that deal or not. And these are like big deals, that obviously at one point were important to us, and I'm glad we did them. But like you're saying, Tom, I mean, some of this stuff, it's like, it doesn't really matter, but our families do matter, and those relationships are really important.
Yeah, it's so true. It's like, we always talk about, you look back and however many years, it's like, is it going to be more important that you did that extra deal, or is it going to be more important that you never missed one of your kids' events and you were always there?
I remember, David, being in Vail over a summer, and you guys were there too, and our kids playing in like that little like river that goes through Vail, and then going and having lunch. Yeah. And I think that James was like 1 and he's 7 now. And just to think about, so like Trey's James's age, and your girls were a lot younger. They were closer in age now to how old Annette is. And that doesn't even seem that long ago, but it's just flown by.
Yeah, the old adage, the days are long, but the years are short.
Yeah,
yeah, it's true.
So true.
Starting to make a lot of sense.
Yeah.
Yeah.
We're going to be we'll be in Colorado some. We'll pack all 5 kids in the Suburban and hit the road and do our road warrior stuff that we do. That'll be fun. I think trying to get to the mountains and get away from the heat as it rolls in is always the goal of our family. So that's what we'll be doing.
You gonna be up there felling trees, Tom, and being a mountain man?
Yeah, I'll probably be doing some more work for sure. Yeah.
Doing some projects.
Getting enough firewood for the cold winter.
That's right. Stocking up. Yeah. Probably doing some.
You probably have plenty of firewood now, right?
I have a lot of firewood for sure. Yeah. But there's always more to chop up and split.
You got a wood splitter?
Yeah, I do. Yeah.
That's sweet.
So there's always more to work on. So, but yeah, it'll be good. It'll be fun. And this year, being the 250th anniversary of our country, it's a pretty special celebration. Yeah. So that's pretty neat to think about, and all the history of our country, and just pretty wild to think about 250 years.
Yeah.
Yeah. It's amazing.
Well, guys, I think this was good. Thanks for joining today and coming on the podcast, talking about the market. It'll be interesting as we get into the second half of the year and see how things play out, if it's very different from just the way we're seeing the capital markets today.
Yeah. Well, thanks for having us. It's always fun.
Thanks, guys.
Thanks for listening to the podcast today. Make sure to subscribe on YouTube or Apple or Spotify, wherever you're listening, and share the episode with a colleague or someone that you think would enjoy listening to this content. Feel free also just to reach out to us. Shoot us a note, tom@dmre.com or tim@dmre.com. Would love to hear from you.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.